Thank you for joining us at XM.com for the Weekly Outlook. I'm Christina Marujos, and joining me today is lead investment analyst Raf Boyajian, and we'll be having a look at the upcoming week, which has central bank meetings and a flurry of data, which of course are going to keep investors very busy. Rafi, let's start with the Reserve Bank of New Zealand, which meets on Wednesday amid expectations of a rate hike. Do you think we will see a hawkish RBNZ, and how can that affect the Kiwi?
So there are strong expectations, Christina, that the RBNZ will hike rates on Wednesday. Now, they wanted to do this in August, but of course the country went into lockdown on the day of the meeting, so they put it off. But regardless of that, markets have somewhat pared back their more bullish expectations because many traders had been betting on a 50 basis points rate hike in October, but that was recently talked down by Assistant Governor Hawkesby. And aside from that, we did have a fresh spike in virus numbers over the past couple of days in New Zealand, and that's raised concerns that the lockdowns will last much longer. And that means the economy could contract not just in the third quarter, but in the fourth quarter as well. So although the RBNZ will raise rates and probably hint at further hikes over the coming months, they might not sound quite as hawkish as being anticipated by the markets, and maybe even hint that they could move at a slower pace if needed. And that could potentially drag the Kiwi lower, which has already been under pressure over the past week from the surging US dollar.
Now, the Reserve Bank of Australia also meets this week, on Tuesday to be exact, but it looks like this meeting might not be as exciting. We have seen some volatility recently. Therefore, what are the risks for the Aussie moving forward and going into this meeting?
So the RBA has pretty much signaled they will sit tight until February, when they will next review their bond purchase program and decide if they should taper further. There's a good chance Tuesday's meeting, therefore, will be a non-event. However, the economic picture around the world has somewhat darkened since the last meeting, so we might get perhaps a more cautious wording in their statement. However, the reaction in the Aussie would likely be limited for the time being, as investors will probably want to wait for more concrete signals from the RBA. And the Aussie will probably continue to be led by commodity prices and broader risk sentiment in the meantime.
Crossing into the U.S. now, the Fed has said that a reasonably good jobs report would essentially lock in a taper move in November. Therefore, all eyes will be on Friday's NFP report for September. Do you think the numbers will be close to what the Fed wants to see? And how will the dollar move?
Well, the NFP reports have been a bit unpredictable in recent months, but given that the extra federal unemployment benefits expired at the beginning of September, and virus cases have been coming down across the US over the past months. So the analysts are predicting a solid print of 500,000 in Friday's non-farm payrolls headline number. But as you said, Fed Chair Powell did signal at the last FOMC meeting that he wants to see reasonably good jobs report, another reasonably good jobs report before they go ahead and taper at November. And so 500,000 figure should more than be good enough to be considered as reasonably good. But if we get something much lower than that, it's questionable whether that would necessarily derail the Fed's plan to begin tapering, because high inflation is becoming a much bigger problem than what policymakers had initially predicted. So they will probably want to go ahead with tightening policy regardless of maybe somewhat a soft jobs report. So unless we get a very bad report, the Fed will probably stay on its current course. But as far as the dollar is concerned, now tapering expectations, it's not the only thing boosting the greenback right now, because there is growing unease about the global growth outlook. China could be headed for a slowdown due to the Evergrande crisis, and now China is also having a power crisis as well. The energy crisis is also inflicting pain in Europe, particularly in the UK, and with higher inflation forcing not just the Fed but other central banks to turn off the stimulus taps, investors probably see the dollar as a safer bet, even as the US economy faces its own uncertainties, such as question marks about whether Congress will raise the debt ceiling.
And last but not least, let's have a look at the Loonie, which has failed to gain on the rise in oil prices. We have two events this upcoming week. Of course, I'm referring to the Canadian Job Report and the OPEC Plus Alliance meeting. Can these two events offer the loonie much support?
So yeah, the loonie has generally been drifting low against the dollar over the past few months, even though oil prices have been rallying. The loonie is very sensitive to market risk sentiment, not just oil prices, and risk appetite has been kind of shaky lately. Plus, the dollar has been rallying as well, so all of that has been exerting downwards pressure on the Canadian currency. Friday's employment numbers will probably be quite solid because the Canadian economy has so far been resilient to the Delta outbreak, and trouble spots in other parts of the world, they haven't really we haven't seen much of a spillover to the domestic economy. So we should see a further rebound in Canadian labour market, and all of this should be supportive of the loonie, and probably the OPEC meeting as well should be supportive both the loonie and oil prices, because OPEC will probably not signal that they want to phase out their production cuts at a faster pace than what they've set out to do because of the latest surge in oil prices. They'll probably stick to the current paths and just raise output by 400,000 barrels per day as initially planned. If so, in case that they unexpectedly indicate they might boost output more than expected in the coming months, that though would be negative for both oil and loonie, but it's quite unlikely.
Rafi, thank you for joining me today. This was the Weekly Outlook here at XM.com.